Hello everyone. In this video I'll be going through the problems you can expect to see on the final exam. In the midterm exam there were no calculated problems, but I'll just be going through the calculated problems for the final. The rest of the problems I have identified in the final exam review that you can find in Blackboard, and those are conceptual. So the calculated ones for the final are shown here on the screen. And the first one, and again these are in no particular order, and you're pretty familiar with these templates if you've been using them in the past, where I have the data that's given, or that can be looked up in the book, in the tan, and then the intermediary calculations in the gray, and then the final answer in the green. We have for the one problem that Escobar and Rose are both 39, file a joint return. Neither is covered under an employer plan. So using my numbers, Escobar earned $122,000 of compensation. Rose worked part-time, picked up $1,500. What is the maximum combined deductible IRA contribution they can make in 2019? So I won't go through any calculations on this one, but I did want to give you a hint on this one, and it makes the problem a little bit easier. And that is, the hint is if the amount of joint income is less than the phase-out maximum, then just multiply the individual contribution by 2. So in this case, the hint is, of course, that they're well within or below the minimum phase-out value. So you don't have to worry about any of the contribution deductible, that would be phased out. Here, since there's no phase out, you can just multiply the maximum contributions for the two married spouses by 2. However, in number 2, we have a taxpayer that purchased land in 2017 for $27,000, sold it in 2019 for $35,000 cash. The buyer also assumes the remaining mortgage. What is the amount recognized on the sale of the land? So again, I just listed the data given in the tan cells here. And the amount recognized is the final answer in green. So when you approach this problem and you see it on the final, you're going to want to add together the sale price of the land, and to that you're going to want to add the amount of mortgage assumed, because that's compensation to the seller. They don't have to pay the $15,000 back. The buyer is going to take care of that. So we'll add the $35,000 to the $15,000, and that would give us a total of $50,000. And then we'll deduct the basis, which is the purchase price of the land. In this case, using my numbers, $27,000. So you add together the sale price and the mortgage assumed total value received by the seller, less the seller's basis, which is the purchase price. And that'll give you the amount of gain to be recognized. Number 3, and again, feel free to stop, replay the video, to get an additional review of these calculated problems. And again, for the other questions on the exam, I recommend that you review the outlined final exam document that I posted to Blackboard. All right, so another calculated problem on the final. A barn with an adjusted basis of $123,000 was destroyed by a tornado. The insurance company paid $155,000. The owner reinvested $180,000. What is the basis of the new barn if not the non-recognition of gain for an involuntary conversion is elected? So in other words, the person who suffered the destruction of the barn can elect to not recognize the gain from an involuntary conversion. And you might recall that an involuntary conversion is a conversion or a change and the property's value that's been foisted upon them through no fault of their own or no choice of their own, such as with a fire, tornado, or perhaps by government regulation, the city has decided to reclaim the property. So in this case, since the owner, the taxpayer, has decided to elect to not recognize the gain, we need to calculate the basis of the new barn under that situation, under that scenario. So again, I've just listed what was given. I've got the adjusted basis at 123, insurance proceeds received, and then the amount invested. So since the non-recognition of gain on the involuntary conversion was elected by the taxpayer, then the new basis of the barn is going to be the old basis of the barn of $123,000, the one that was destroyed. And then to that, we're going to add the difference between the amount invested in the new barn and the insurance proceeds. And so once we take the 123 and add it to the difference between 180 and 155, the new basis in the new barn is $148,000. The key to this problem is to remember and to pay close attention to the fact that the taxpayer has elected non-recognition of the gain from an involuntary conversion, because we use, of course, a different approach to calculating the basis of the new barn under that assumption. Number 4, Casey and Lupe have AGI of $450,000, twin daughters at age 5. What amount of child tax credit can they claim? So they give the information, and I've just listed the data given in the tan cells. Now, what's interesting about this is that after you list the information, we got to look to see if any of the tax credit might be phased out because of their very high AGI. And it turns out that there is a $50 reduction for every $1,000 over the phase-out limit of $400,000. So you can see that there are 50 $1,000 values over the minimum threshold. 450 minus 400 is 50,000, and that divided by 1,000 is 50. So there are 50 $1,000 values that their income AGI exceeds the low end of the threshold. So we'll simply take $50 reduction times the amount of reductions. There is 50 reductions of $1,000 each. So the reduction in the tax credit then is just going to be 50 times 50. Nice easy numbers in this situation. So that'll be the reduction in the maximum credit. So what would the maximum credit have been? Well, it would have been $2,000 times 2, one for each of the twins. So 2,000 times 2 is 4,000, and then we're going to take the 4,000 and reduce it by the phase-out amount of 2,500. And once we take the 2,000 times 2 of 4,000, reduce it by the $2,500 we calculated earlier on the phase-out, that means that the amount of child tax credit that may be claimed by these taxpayers is $1,500 combined for the twins. So that's the total amount. And then the last calculated problem for the final is Danita is married, paid $5,325 semi-monthly for her income. She claims 4 withholding allowances. What amount of federal income tax will be withheld from Danita's gross wages for the payroll period? And then round your answer to 2 decimal points. Well, again, in the tan cells, I just repeated the data given. $6,000 semi-monthly earnings. Number of withholding allowances are going to be 5. That's the amount she's claiming. Now, how did I get the amount for each withholding of $175? So here I had to go in Chapter 10 to page 5. So page 10-5, and we'll see if we can go to 10.5. They're paid semi-monthly. So if Danita's paid semi-monthly, the allowance amount is going to be $175. So again, we're looking for semi-monthly allowance amount of $175 because she's paid semi-monthly. So I just entered the $175 here as the amount allowed for each withholding allowance. So the total amount of withholding allowance in an intermediary calculation is going to be 5 withholding allowances claimed times the $175 value per withholding allowance. It gives a total of $875, $175 times 5, and that gives us the $875. That will be the reduction of the total amount of her earnings. So we'll take the $6,000 semi-monthly earnings and we're going to reduce it by $875. And then that will give us the amount subject to taxation of $5,125. All right, so that's the amount that's taxable. So you recall that to calculate the tax, the federal tax on the 5125, we need to go to page 1043 and go to page 1043. We see that for semi-monthly, table 3, we're going to go to the right side here because she's married. And so in this case, we're going to go to the income, and I'm just going to jump back to show you the income again. The income subject to tax is 5125. So 5125 for semi-monthly married puts us right in this third row. So we know that she's going to be taxed at $378.52. So we'll have $378.52 plus 22% of the amount of her income that's subject to tax greater than 3,781. So 378.52 plus 22% times 3,781, and that gives us a total then of $674.20 using my numbers. You will, of course, get a different number for the final, but the method to calculate it will be the same. 378.52 plus 22% of 5125 minus 3781, and the 3781, of course, is from the table. So feel free to run through my calculations again, or contact me if you have any questions, any of these calculated questions for the final.